But I want to go back to inflation, and I know that you are a big proponent of owning stocks over the long run, but these are some markets that, and I hear this every day from people, it, you know, people that are grown-ups, Terry, we've seen markets actually go up and down. There's a lot of advisors out there that I always say that I have cowboy boots older than they are, and they've never seen anything go down. What do you tell the people right here, even though historically, yes, stocks work, what do you say?
Well, I say, like a typical economist, which I'm not on the one hand, and on the other hand, here's what I know about stocks. There's never, going back 100 years now, this is Ibbotson's research at Morningstar, never been a 20-year period where you lost money in a diversified portfolio of large company stocks with dividends reinvested. And that's even adjusted for inflation. Sure. So I know you need a component of stocks in your portfolio. But I also know that as we talk, we're so close to all-time market highs. And anybody who had a 401k for years and put that $300 away, suddenly you've got a real hunk of money, you've rolled it to an IRA, you're making investment decisions about it. And because the market's been so generous, it's been, oh my goodness, I have more money than I ever thought. And now the question is, how do you get back to an asset allocation that makes sense? So let me just say this. You got to have stocks. That's going to offset inflation. I know we're going to have inflation. I don't know. Am I the only old person that remembers the components of inflation are too much money pushing up prices, wages, a spiral? We're going to see that.
Unfortunately, even though that's a factual thought, you're somewhat of a contrarian right now. Because it seems like everyone's forgotten that.
Everybody has forgotten that. And somebody haven't learned the lesson. But here's the thing. I know everyone out there said, okay, she said we have to have some stocks, but maybe we have too much in stocks. Where do we put it? What are our other choices? Okay, so bonds? Absolutely not. Because you can lose as much money in bonds as you can in stocks. Who would want to lock up your money now for 10 years at 1.5% or so in U.S. Treasury bonds? If we think inflation's coming, we know the bond market will demand higher interest rates when the Treasury tries to borrow more, despite what the Fed's been able to do recently. And so you don't want to be locked up for 5 or 10 years. So you want short term. And then you go, oh my gosh, I went to my bank and they're giving me like 0.5% on a 1-year CD. I just looked those up for a show I did recently. Yeah. I mean, that makes you feel like a fool if inflation is up at 5% because you're getting a 6% cost of living increase. You know you're losing. So Stan, I turn the microphone back to you because what would you do?
Well, you know, I used to live in the world with Morgan Stanley, Dean Witter, Payne Weber, UBS. So I used to be on that side of the markets. It's a tough place to be right now just because it is volatile and our gut instincts are all telling us, you know, if there was an event, this thing could dip. I do think I agree with you 100% that you have to have that long-term vision, but that's hard to do in the short run. You do have to be disciplined. You do have to hang in there. There are some, you know, the reason our phones ring off the hook right now is because people are buying these multi-year guarantee annuities because they beat the CD rates. That doesn't mean it's perfect, but that means that's one of the few places to go. So there's, you know, as I tell people, Terry, there's no perfect answers, just really bad sales pitches, which we don't do. But I'm really interested to hear your take and insight on the corner that the Fed has painted themselves into. And we've been around a long time, and this is blue water. I'm anxiously watching, just like you are. What are they going to do? I know that I think the chairman gets, I think he gets reelected or reappointed in January. Do you think he will then be a little bit more autonomous than he is now, or is he going to continue to be bullied by, you know, whoever's in office?
But let me back up a minute, because he or she. Okay, I want to talk about Jay Powell, but I want to take a step back because everybody out there is going, but wait, they didn't answer my question. So what do I do now? Okay, and you're right. No, not perfect answers. No. But if there were ever a moment that, number one, you had to be balanced, you do need exposure to stocks. You do need to understand that it's entirely possible. Even if you're 65 or even 70, you're going to probably live into your 90s another 15 or 20 years. Historically, over long periods, stocks have beat inflation. So you need a component of stocks. It's not just the economic decision you're making, it's the emotional decision. It's easy to say that with the Dow, within 5% of its all-time highs. If the market drops 15%, are you going to chicken out all of a sudden and dump your stocks and say, oh my God, I can't afford to lose it. I won't be able to be retired.
Right.
Then you have to decide that now. And it's very painful to say, I only get 0.5% in my CDs. I'm going to talk to Stan about, I have a MIGA. I've
Sure.
had a fun time because I always bought stuff that I wrote about so I could see how it worked. And boy, for a while it lagged the stock market. It's not in my stock component, but it makes me feel a lot better as a part of my cash component. And the fact is, you need liquidity, you need inflation protection. I'm not against saying with gold still under its highs, it's around $1,800 as we talk, that you might need a gold shares mutual fund, maybe one that pays dividends. I'm not going to go tell you to get into cryptos. If you want to do that, you can go to Las Vegas and buy some cryptos, either one. But what I'm saying is you need a really disciplined approach right now in a quiet time, because otherwise you're going to panic. And having a little cash, even if you're losing out to inflation right now, having some liquidity, safe money, chicken money, I call it, money you can't afford to lose on the sidelines, will allow you to stick with your other investments and not panic.
Hey, Stan the Annuity Man here. Did you like that little taste of my podcast, Fun with Annuities? Hey, if you want to see the full version, click the link and watch the whole darn thing. Remember, Fun with Annuities. Live in the reality, not the dream.